We're looking at exercise 3.3 on page 121. The question comes down to 1/3 of the work related to $15,000 cash received in advance is performed for this period. So 1/3 of the $15,000 right here is $5,000. Now the question comes down to is how do we record that? And if you look at page 64, page 64, you're going to see unearned revenue, transaction number 12. Remember what I said earlier, whenever you get stuck, think of what's happening to cash, and that'll point you in the right direction. We know cash came in, $5,000. It simply said 1/3 of the work related to $15,000 cash came in. So we know cash is going to go up. So we know an asset is going to increase somewhere. And so what happens is the textbook calls it unearned fee revenue. Unearned fee revenue. Cash is going to go up, is going to be debited by $5,000, and fee revenue is credited by $5,000. So if you look at page 56 of your textbook, the diagram right there, what's happening is we're increasing the liability. Our liabilities are going up by $5,000, and also our assets are going up by $5,000 because we're increasing the assets. Now what'll happen here is once the work is done, the liability is going to go down and the income will go up. So you're going to have liabilities going to go down, it'll be decreased, and revenue is going to go up, which is under the equity section. So just study page 56 and page 64 for how to do that transaction and you should be fine. Now wage expenses. What we're learning about here is accrual and deferral. And I'm going to put that up here, if I can write it. Accrual and deferral accounting. We're accruing revenue before we actually earn it, as you can see in exercise A right there. And we're deferring expenses until the cash goes out. So in exercise B, or number B, wage expense. And if we look at that for a second, on page 121, wages of $8,000 are earned by workers but not paid as of December 31st. So we owe the workers $8,000. So what we want to do here is we have to put this on the books. We're closing the books out December 31st, but we owe them $8,000. And what we're going to do is we're going to, if you look at how to increase an expense on page 56 of your text, how to increase an expense, it's going to be, you're going debit. You debit expenses to increase it. Now we're also increasing a liability. And if you look at page 56 of your textbook, how do you increase the liability? You credit it. So we debit the expenses right here. We're increasing the expenses, and we're increasing our liability right here. And then once we pay it off the cash, cash is going to go down, and the liability goes down. Now depreciation. Depreciation is a non-cash expense. What happens is every year, the value of the equipment goes down in value. Think of your automobile. Each and every year, the value of your car or truck, whatever you're driving, goes down in value. Motorcycle. And the same thing happens for equipment. So we are looking at depreciation expense, $18,531. It's an expense, although it's a non-cash expense, it's still an expense. And if you look at page 56 of your textbook, decrease expenses, debit to increase expense. We're going to debit right here, and then the value, and then on the right, and then on the other side of the credit, we are decreasing the asset. So the value of the asset is actually going down. So we increase the expense, $18,531, which is an equity transaction. Then we go to the asset column, and how to decrease an asset, you credit it. Now, this is called a contra account. And contra account means opposite. So the accumulated depreciation right here is what's known as a contra account. It offsets the assets. So we have, for example, just give me 1 second here. So we have the contra account. So we have equipment, and it's worth $50,000. This is the asset right here. The asset, we have equipment, $50,000. And then we are going to bring down the value of the equipment. So the equipment is worth $50,000, and we bring down the cost of the equipment by $18,531. And over here, and then we're going to have expense. And to increase an expense, we debit $18,531. So we've decreased the value of the equipment by $18,531, and we increased the expense amount by $18,531. So the debits and credits will balance out. And you can look at page 99 of your textbook. Page 99 of your textbook is going to walk you through the depreciation process. That's how to do the first 3 exercises. Please get going on it. Keep posting your questions and ideas with the classmates if you're having any more problems in the classwork, and collectively we'll get you through it. I hope this has been of some help. Thanks for watching.